Moment while I go live on Facebook. It'll take just 1 second. I hope you're doing well. And we should be live on Facebook. Hi everybody, welcome to the Strategic Swing Trader. I hope you are again doing great and enjoying the weekend. My name is Sami Abu Saad. I'm Director of Education at T3 Live. We're gonna go ahead and get started, but as always, before we start, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, while you're at it, if you'd like to download a copy of my free ebook, link for that is in the description below. But without further ado, let's turn on the charts and get started. Couple things. First, I typed up the watch list into the description of the video. So if you just want to copy and paste it, again, go to the description of the video below. Bullish and bearish watch list. Second thing is, if you'd like to help support our channel, please be sure to hit the like button. That helps us out a lot. And the third thing is, enjoy. Let's go ahead and get started. Market, there isn't really much to say about the market other than to say that it's extremely bullish still. We've had that power uptrend for a while. We did have that pullback and I went long. Still is a long position in the newsletter. The Qs took half, and in the back half I'm sticking with the original stop at 352. But the truth is, I'm also, as soon as we pop here, as soon as we take out another prior bars high, I'm raising the stop to 360 something, 360.16. So that's going to become the focal point going into next week, is this bar's low, which is Tuesday's low. We shouldn't take it out, but also as soon as we take out a prior bar's high, such as Friday's high, then we will have a pivot. After which, this pivot should not break, but I'm willing to give my position a little bit of room and stick with 360 as the stop. So what I'm saying here is the market is bullish, but it should not break under 360 going into next week. The most recent pivot on the daily chart is still all the way down at 352, but I'm hoping we move up on Monday or Tuesday and we would establish a new pivot, after which we should not take out 360. To show you how bullish the market is, Amazon, which was the third largest company in the country by market cap until this gap down, and now it's Google number 3. The Amazon gapped down 7 or 8%, and the Qs didn't even budge. I mean, closed down 0.5% or even less than 0.5%. I can check. Yeah, it closed down less than 0.5% on the day, the Qs, and so did the SPY, less than about 1/3%, exactly 1/3. Crazy bullish. It got a little bit sloppy last week, especially because of Amazon. We also got out of Google. We had Google for a while, and then got out of it on earnings, the day before earnings, actually, this day. So it got, and then we saw Google pull back. So it got a little bit sloppy last week, and I'm hoping we attempt to go higher initially this week, and if we fail, then we know we're lower. But for now, the bias is still bullish. The IWM, nothing interesting about it. Continues to base. Okay, so bullish unless we take out 360 on the Qs is my bias going into next week. In terms of the bullish watch list, here's what I got. I have ADSK, which is looking like it wants to break out to all-time high. Okay, so this is a 1, 2, 3 play. I like it long over 322.68 with a stop under 317. Okay, all-time high. Like it a lot. Very bullish. ALKS looks beautiful over 2605. Stop under 2533. Looks beautiful as a breakout. 1, 2, 3, 4. 1, 2, 3, 4 is when you have an igniting bar, and rather than one, you get 2 resting bars. 2 narrow range bars. So you get igniting bar, 1 narrow range, that would be a 1, 2, 3. Or if you get igniting bar, 2 narrow range bars, and then a continuation bar. That would be called a 1, 2, 3, 4 continuation breakout, basically. So I like the ALKS a lot over 2605, 2610 maybe, because it's a little bit spready. Stop under 2533. AMKR is exactly like the ALKS, except I like the ALKS more. But it's the exact same pattern. The breakout, 2 resting bars, and if we take out the highs of the last 3 bars, then it should be higher, and the target is up there. So it has plenty of room to move up, and really small bars, so that makes for a very tight stop. That's the AMKR. CIDM doesn't look as good until you kind of zoom out and you see that, and you'd see that the CIDM on the monthly is getting ready for a breakout, perhaps. I'm not entirely sure. I don't have an order for it, but it's a watch. I got the ADMP, same exact setup on the monthly as a breakout. Got in it on Thursday. On Thursday, this bar at 110, and then once it took out 110, I also had another order, part of the newsletter, at 111. So this is a breakout that we're in, and and also water, WTER, same exact on the monthly chart. So if you look at the monthly, same exact as the CIDM. So I'm watching the CIDM to hopefully give us a breakout like the ADMP did, like the WTER did last week. IRM was one of my best plays earlier this year as a breakout. It was a 1, 2, 3. I don't know where exactly. Let's see. It was a breakout, actually. It's right here. That was the breakout that I took. So this was one of my nicest plays earlier this year, and it kept going to 46. Now it pulled back, and it has a weekly buy setup. So I like it over 44.40. Stop under 42.20. Okay, target the prior high, which is around $47, 47.30. It's a weekly buy setup on the ERM. The KYMR is a weekly 1, 2, 3. I was on the right time frame, the weekly chart. I switched back to the daily. That's a 1, 2, 3. Long over this bar, stop right here, but that's a big stop on the weekly chart. So my suggestion is to play it off the daily with a tighter stop. Has plenty of room to about $78, I think, about $78. But the entry would be over $61, $60.85, but it's a little spready, so I'd give it some room. Stop under the red bar's low, which is $56.68, and target about $78 on the KYMR. MAT 1, 2, 3, 4. Gap day, the pop, the narrow range bars. So I like it higher over these 3 bars. The higher the 3 bars, whatever is highest. Stop right here and target right there. Okay, so what are the numbers? Let's check. It's over 21.92, stop under 21.14, and target about 23.30. Okay, so those are the numbers for the MAT. TPX, what a beautiful 1, 2, 3. Had a breakout on Thursday, a little narrow range bar on Friday, and if we get another nice big green bar on Monday tomorrow, we'll have that 1, 2, 3 long, basically, if we get this kind of a bar tomorrow. So I like it over the whole number, $44. Stop under yesterday's low, Friday's low, right here, stop right here, and it's at all-time highs, I think. So there is no target that I can come up with. We just have to trail it. Okay, we just have to trail it. Last on the list, on the bullish list, is Tesla. Tesla got bullish. I bought 43 shares, which is a $2,000 risk, but that was on Thursday, this day. Okay, but I still like Tesla over $700. Right here, long. There are a couple of places to put the stop. The best place is, of course, 620 under the support, so as to not get shaken out. But then that's an $80 stop. So the bigger the stop, the smaller the share size, and the larger, the smaller the reward to risk, right? So because the difference between your entry price and your stop price, that's your risk zone. The difference between your entry price and your target price, which is $900 in this case, that's your reward zone. So it's really important. One of the key components to a trade, okay, to a successful trade, is evaluating, making sure that you have enough reward compared to the risk, okay? We call that the R to R, or reward to risk. So I like it a lot over $700 if you're not in it already. The right entry was over $665, I think, $668 on Thursday. But if you didn't get it, I do these videos only once a week. So obviously 4 days out of the week, I can't give you the ideas. I can only share with you my ideas on the weekend. Unless you're a subscriber, then you get my ideas on a daily basis if you're in the Strategic Swing Trader newsletter program. But in this case, over $700, there's 3 places where one can place the stop. One would be under Friday's low. That's the most aggressive and the tightest stop. The second place would be under this bar's low, which is Wednesday's low. And the most conservative and the safest would be under 620. So over 700, stop under 669. Or over 700, the entry, stop under 648.80. Or over 700, stop under 620. Okay? So 3 different spots, depending on how sure you are about Tesla. The plays that I feel very sure about, that I feel are very clean and ready to go, they're not gonna, go back and forth for a while, I use tight stops. The ones that are a little sloppy, I use wide stops for, because I don't want to get shaken out. So it's up to you. If you're in the newsletter program, then feel free to log on to your T3 Live account, and you'll see what numbers I'm using for Tesla and which plays out of this list, because I don't take every item on my watch list, which plays I picked for my own account and for the newsletter. Let's take a look at the shorts, which are just as good, by the way. We got ADVM. I had a call on it on Wednesday or so. It didn't break. It broke out a little bit, popped, so I canceled it, but it's now back down. I like it short under the base with a stop above it. Just under the base, stop above it, which is under 222, I think. Stop over 258, I believe. 255, 55. So that's the ADVM short. ARRY. I like it short as a 1, 2, 3, 4 on the weekly chart. See it? Looks beautiful as a breakdown too. Like it. Under the base. No, there's a couple of places to get in it. One would be obviously under the daily base, under this base, but that would be a big stop. An alternative would be just under Friday's low, short as a sell setup. Stop right here. How about that? That's a tight stop, and it has plenty of room once it gets going because it's at the all-time low, so it can really fall apart. That's the ARRY. AVXL is a 1, 2, 3 on the daily chart. Not a ton of reward to risk, I don't think, but short right here, stop right here, maybe gets to the 200 MA. So that seems like 3 to 1 to me. That's pretty good. Okay? That's pretty good. But what if it only gets to $15, because that's the next support area, around 15? Then it wouldn't be good enough. But it's an idea. AVXL as a 1, 2, 3. BLL is a daily sell setup. Better yet, it's not a very good daily because we have a flat 20. Better yet is the hourly chart. That's a beautiful rounding top with a breakout failure right here. Okay? So I like it short under the base, stop above it, and target 1 around 78. Target 2 I think is off the daily chart, so you'd have to look at the weekly at $75. Around $75. I don't know if that's, yeah, that's 75. So 78 would be target 1, 75 would be target 2. FGEN is a daily base breakdown. Looks good. Maybe not as good as the ADVM, but it's a similar pattern. Similar pattern. Under the base, under 1250, stop over 1350. $1 stop. GPS, daily sell setup. And an hourly base breakdown. So notice how it popped on Friday and then it got sold. That big green bar turned into a topping tail bar. So it really shouldn't break under 2850. If it does, I like it short with a stop over 3030, I believe. But let's see. Yeah, 3013, not 3030. 3013. Entries under 2850, and target 1 would be the 200 MA and the prior support. Target 2, it's a big base, by the way, on the GPS. Target 2 perhaps around $24. This bottoming tail bar is low. Okay. IRCP, I guess I don't really like it. Ignore. MCRB is a base breakdown just like the ADVM and the FGEN. So short under 680, stop over $8. So it's a pretty big stop, and target on this would be the prior pivot low around 384. Let's say $4. So under 680, stop over 8, target $4. And last but not least is the NKLA. Has a beautiful 1, 2, 3 short under 1179, stop over 1260, 1257, and target on this, not too sure, maybe $10, maybe 0. I don't know if the NKLA is going to recover from this, honestly. I think NKLA does not look good at all. All the EV stocks, the legitimate EV stocks, are heading back up, and they've popped really hard, like XPEV. So popped really hard, doubled, more than doubled, way more than doubled, right? And then, no, about just about doubled, I guess, 22 to 40, 48. And it broke down, went back up. So that tells me this rally was not just an anomaly. It's here to stay, because it broke down, didn't follow through to the downside. And we see it also on NEO, broke down, no follow through to the downside. LI, all the Chinese EV stocks. Tesla's starting to move up. So a bunch of them are moving up, with the exception of NKLA. So that tells me there's something seriously wrong with the NKLA, and that's why I like it short. As I said earlier in the video, if you're a subscriber, then feel free to log on to your account, and you'll see which plays I picked for my own account. Okay, this account right here, live account, and which plays I also picked for the newsletter. Or if you'd rather wait for the email, it'll hit your inbox before 8 a.m. tomorrow morning. But with that said, I hope you enjoyed today's video. If you have, be sure to hit the like button, and I will see you next week. Take care, everybody. Best of luck with your trading next week. Take care.